Welcome to TradeTheNBI.com. This is John. This report is for the 8th of September. Well, contract rollover taking place at this particular time. Here we are in September. Continuation, well, what you're seeing here is this is the program that I've been working on. I was talking about this on our Skype chat about segmenting the market. All these numbers are identifying as the components so that we can get changes and turns within each of these market segmented portions. I'll show more of it on the 5K chart. Needless to say, shakeout's improving. Rising steel with green and that lifted slightly. We're seeing a little bit of trail off on that, but you still have long-term, mid-term buyers pushing things and not overbought in any way, shape, or form. NQ, likewise, staying ahead of everybody else. And the Dow trying to catch up, not too bad. The Dow's actually starting getting closer to getting caught back up there parity-wise, which is nice. When you have everybody back now, it's we've reached an equilibrium where you've got people returning after the Labor Day, and now we got a balance, and now we can start to see where things are heading, and still fairly bullish in the sense that no major impact news has caused any change whatsoever. Oil, a slight rebound, still got some headwinds. Supply capability at any time is going to be a problem going forward. Gold, we saw that with the positive extremes, just going to retrace those. That would be the opportunity to look at it for additional move. And again, bonds, even though you're getting them move back and forth, it's not really going to do anything. Brief pop back for the euro. Got overbought pretty quick. Slide across here and get a little better view. And not much of a retrace into there. I mean, we're just pretty much hovering around this 112 range to the low side of the 111.5. So I would imagine you get a little upside to that just under 113 range. We've been pretty static here for countless bars. But it's been a nice trade in between. All right, so here we go back to the case chart, and you can see the effects of it. And what we're looking at will be, so for instance, within this one segment where you have your DOC spread creating what we would call a down cycle, then you see that it's number one. The other one, number 5 up here. This happens to be when you get a false crossover of the steel. The cyan moving below red, several other parameters within it as far as shakeout and everything else, but that will create its own separate zone. Still have some area to fill in. You can see there's a little blank spot, so you have to have a number above everything in order to be able to identify. And then from there, you can identify key areas that would be reversals as far as a short or as far as a turnaround like this, where we have the steel pop up with the orange going below the red and green, and then a long algo combination, all of that taking place at the same time, and a turnaround buy situation. And if we look at it from this one here, you can see short signal comes in, and the secondary one was just go fake balance. So it stayed within the short configuration until we ended up with the pop here of the steel, but we didn't get below the red line. And then finally it happened on this one, along with the proper shakeout. That would be where the steel dips back below the the positive 7.5 right there, and above the long algo for the buy signal. Where did that take place? It wasn't much of a short, 74. And the original short signal came in at 76. So a lot of wasted boom for just a couple. Now, yes, it did dip below all the way down here, but you weren't going to get a signal down at 71 that was going to cause you to turn. Now, some people will say, well, after 5 points, you'll go ahead and take some gain. And that just depends on how many contracts you trade. But if we scroll through this, you get a better idea of seeing the market as individual pieces. And what I was pointing out on the Skype chat is that in the normal course of the market, when things are just in that middle zone where we're trading sideways, you just don't have effectively algos doing much of anything. And then there's a point where you get an immediate change. And I equated it in several instances to where you have your normal humdrum getting ready for your day, nothing happening, or a weekend, and then all of a sudden there's a deal or some other kind of business aspect, and boom, there's a level of excitement that takes place with that. A lot of emotion jumps into it. Same thing happens with the market. The problem with a lot of indicators is they read just the same thing over and over. They get overbought and they stay that way, but they're not really checking to see, like the extreme does, whether you've reached an overbought condition that needs to be filled back in, or whether it's just going to be a continuation where you go immediately get close to overbought and then boom, it eases off immediately, and then you're like, even though you've had this huge move up, you're not overbought anymore. And most of those can't do that kind of transitioning, and that's what we're attempting to do by incorporating the chaos events with the Power Mode 2 and that to give us better clarity as to when we can be more aggressive in some of these situations. And it's just going to allow for unique configurations within the algo of the DOC shakeout and that to attack those with a higher probability of success. But we can already see we're going to have some very effective moves as it relates to a lot of these things. And then when we get the proper signals that convert, you can see it repeats over and over. This is the same situation where you have steel dipping below. In this case, below the negative 13 here. It's not below the negative 13, what we would call that no man's land between negative 7 and negative 13 here. It's below. Stronger signal at that particular point. A lot of different variables within that, how recent the shakeout was below the red line, those kinds of things all get taken into account as far as how it relates to how much money force is being applied into the market. So that way you don't get a bunch of false signals is the idea, to help eliminate a lot of that misview. But you can see even with the long algo leading, and we're going to be converting into short setups that will play much longer trends given what we understand about how the DOC functions and that. And so all good. As always, though, we get the rollover taking place for the September contract. We're going to be moving to the December. Be prepared for that one. And as always, though, trade well. We'll talk again later. Oh, and by the way, I'll probably be trying to get this out. I mean, you won't see the numbers. I'll be removing those in the final product that comes. I'd like to put in a couple of the buy configurations within one or two of these cells so you can see how that's going to transition. And while it's still great to use the general setup that I had, it's going to cause you to miss a couple of key turnaround points that'll take place early, like in this particular case where you end up with the plus 13.5, the dip down. No, it didn't continue. You don't know that, though, when it happens. So you've got to take some of these signals as they are and work with them that way. And they're still going to produce. I mean, gosh, in this particular case, what was the number? From 64 and shoots up to 69 range before it flips back into another short configuration in 67. So, you know, there'll be decent moves. All in all, it's going to be good stuff. As always, though, trade well. Talk in later.